All right, welcome everybody. Happy Wednesday, September 21st. How's everyone doing today? The chat should be working today, right? No technical difficulties. Good to see you all. So looking forward to spending today. Might be a little bit shorter just because I'm gonna head out a little bit early to get ready for the 2 o'clock FOMC. And what I mean by that is there's a couple strategies I like to day trade right after the announcement. And what I'll probably do the next time we have the announcement is have this call and then stay online and we can trade together. Probably what'll happen, not today, but probably next time. But anyway, the reason I even bring up FOMC, I'm not a big news guy, meaning as a swing trader, news happens all the time, so I don't pay too much attention. But there are 2 different announcements I'm aware of, because it can at times move the market, right? And so bear with me, let me just adjust this real quick. Okay. So the one announcement that I pay attention to is FOMC, which just means I don't usually place new trades right before the announcement. Okay. And then the second is non-farm payroll, which is every first Friday of the month. Again, I just don't usually place swing trades the day of the announcement. Nice thing about non-farm payroll itself, right? That is before the regular market opens up anyway. So again, 2 o'clock Eastern in an hour, we do have FOMC. Will the markets move? Nobody really knows, because again, the reason why the markets typically move is surprises. Okay, they already have it baked in what they think is going to happen, what they think the announcement's going to be with rates. So it would have to be something that confused the market or wasn't expected for the markets to really kind of freak out. Okay, but there's that risk, right? There's always that risk. Okay, so with that though, I really wanted to bring up the VIX here to start out today's session, because as you can see here, the VIX has been really right around this 28 level, has been, key resistance. And so if it's going to break out, which typically September, the VIX moves higher, and it has been moving higher, but no blow off yet like back here. And so if we're going to think that, hey, we might be at a low on the market, what I like to see first is the VIX to kind of freak out, head higher, get a couple of wicks. It can even happen in one day, and then it'll head lower. That could be a market blow off. In this case, market bottom. And so, but at this point, it's just been going up to this 28 or close to it, and then coming right back down from a volatility perspective, right? So when you bring up like the SPY, remember, from a seasonal perspective, September is a bearish month, right? You can see the lag line showing, most of September is a bearish month. And, the interesting thing about September, because it is bearish, a lot of folks don't really understand that or realize that. And so if you're a trader that only looks for long plays, September is definitely the month you probably don't want to look at it too much, unless you're looking at like inverse ETFs and so forth. But this move is really, really normal. And so at this point, though, are we at the low, right? You can see today's candle's not doing much because, again, they're waiting for the 2 o'clock news. But we have a lot of support right here. So between the 390 roughly and 383, it's consolidating. So it's either going to break down, obviously, or break above. Using Heikin-Achi, it looks like today's, again, indecisive. We can let Heikin-Achi determine that after today's candle closes, which direction the market wants to go into. If it does go down and break down, it'll probably break down at least to this 370, maybe 365. But October's coming. And probably my first or second favorite time of year to trade is Q4, specifically October into November. The bulls come out. And so, will this year be the same? Nobody knows. But we have a system in place so that we're not going to just jump the gun. I'm not going all in on October 1st, right? We have rules, we have guidelines to follow. We get triggers, right? But you can see the weekly candles here from a Heikin-Achi perspective, solid red, flat top here. Okay, I'm not going to just go long as at this point, right? That could be financial disaster. So I like to wait for the weekly to at least give me one green Heikin-Achi, then I'll look for long plays. And you can do that analysis on all your individual stocks as well. If it continues lower again, I do think we'll come down to this 360, probably the 365. We'll probably test the lows, and maybe today it will be a catalyst for that finally move aggressively down to the downside. But this right here fooled a lot of people, right? And again, you could have still made money on this as a shorter term trade. But what you really want to be careful of is, when you have a bearish month, sometimes it's better to ignore the retracements. And then once it resumes the direction of what seasonality likes, right, then you can take your triggers back to that direction. Or if you're going to counter trend, in this case, recommend maybe half size, right? That way, again, if you are going to be more risky, you then at least can eliminate some of that risk by taking half a normal position or a quarter of your normal position. That's typically what I do if I'm going to take a trade that is more aggressive in nature. I usually go in smaller size personally. So again, the SPY today, we'll see what happens, but at this point, I'm still bearish. Now, when we look at the sentiment here, okay, so the blue line, retailers have been net long on the Dow. I got the Dow up today. And so there's room to run, meaning they could continue to get more long. You may ask me, well, what do I mean by that? Well, you can see here, right, they've been up to 75%. At one point, they were almost 78% long, net long. Okay, and when they were going and adding their longs, you can see the market going lower, right? I mean, again, it's incredible. That's always how it works. Okay, is when retailers are adding more and more longs, the market goes lower. And then down here, when the market was going up, right, retailers continue to add to their shorts. Okay, and why is that? A lot of reasons, but one of the main reasons because I've talked to a lot of traders throughout my career and done research on it. A lot of the reasons is they're always trying to pick bottoms and tops. Okay, they're fascinated at trying to be right. So they'll aggressively here say, okay, the market's going higher, so it's probably at a top. I'm going to start shorting, right? And the market just keeps taking their money. So where we're at right now, okay, you can see we've been consolidating on price, absolutely. But you can also see that there's more room for them to go historically, for them to add to their long positions. So what could happen today? Giving you a hypothetical at 2 o'clock, right? The market's going to maybe do some short-term reaction, either direction, whatever. But by tomorrow, retailers will get more involved. And if they then start continuing to add to their long positions, then, and if that happens, then that's when the market will resume its downtrend. Okay, if they start adding to their longs, then the markets will continue down. Again, that doesn't mean necessarily every day or right away, but we will test those lows if this blue line continues higher. Okay, and it's got room to go up to the 75% or higher before we start getting close to that top. So yes, this could be a top, absolutely. But what I like to see is let them continue adding to their longs, get to the extreme position. Ideally for me then, as we get into October, which is historically start of the bull market again, if we have retailers about as long as they'll get going into October, then we know absolutely we're getting close to a bottom in the market in this case. And then I'll be looking for my triggers like I normally do. Okay. So keep an eye on that. Keep an eye on that, and I'll keep talking about it. So again, on the SPY, we've talked about that. Now, the S&P and the NASDAQ, they're all the same. They're all looking the same. So it's the same analysis for those. Okay. Now, crude. So again, just looking at the weekly, folks, weekly Heikin-Achi, there's no reason at this point to get bullish, right? No reason to get bullish. Seasonality is to the downside. So what you're looking for to trade crude, right, is retracements back to the downside. Like, this was right here was a good short play. Now we're getting another red Heikin-Achi here back to the downside. If you do look at sentiment on crude, yeah, I do like to look at sentiment on crude as well. Let me find it here real quick. There it is. What you can see is they were extremely bullish back here in early September, and now they've reduced their long positions, but they're still net long. So they've been net long ever since like early July, I should say, right? Then they shifted to the long side, and then that's why the market has been continuing to kind of bleed down, right? Nothing too substantial. But again, even after today's Fed announcement, it could affect oil, obviously. If retailers continue to add, just like with the S&P and the NASDAQ and so forth, then oil will continue down. Seasonality wise, it should continue down. So if we get a pullback in price in the next week or two, and then I get another sell signal, I'll be all over that. Okay. So again, if we get a retracement back up to some of these levels, maybe 90 or 92.5, or back up here where it hit 97.5 twice, and then it reverses fields, right? That'd be a great opportunity, in my opinion. Okay. All right. Trend is our friend dollar index, right? Again, I hope this helps when we talk about this every couple of weeks. Remember how important trends are. And, we've had pretty much since June an uptrend in the dollar on the weekly, except for 3 bars. And we're back into a flat bottom this week, flat bottom. That's super bullish. Plus it matches a seasonal pattern. So it's pretty easy from execution standpoint, right? You just take the triggers, and you can always go on smaller time frames. But here, when we went from a red dot, yellow back to green, that can be a re-enter. Or in this case, it doesn't happen often, right? But we had 3 green Heikin-Achis, but yet the Laguerre was still heading down. So when that happens, you can just cross your arms and wait. Absolutely, you can do that. Now it's heading back up, and we got a new high on the dollar index. I don't go in on highs. So again, I'm patient. I'm going to wait for the next retracement, and then I'll look to re-enter in the near future. Yes, it could continue higher, but I prefer not to get in at highs. Okay, that's my personal rule, because in most cases, when you get in at highs, you're not going to make money. Or lows, okay, or lows. But yes, the trend is our friend here. Okay, so let's look at gold, right? So we know gold metals in general have a nice seasonal short. I mean, a beautiful seasonal short till we get to the nice Christmas trade, right, on the long side. And so again, same thing here. You can talk about consolidation, but I'm just waiting for the next pullback to the upside so then I can re-short, right? So then I can re-short. This is a good entry going from the yellow back to the red here. to the downside. That was a nice little short play on gold, but 1670 seems to be really holding here, right? So at this point, as a swing trader, you want it to retrace, then get a sell trigger, and that can even be off of a 4-hour, right? You can go to a 4-hour trigger, right? Next time it comes back up, and you get a look like right here is a nice Laguerre trigger short right here, right? Then you can look to re-enter short. But again, where seasonality can help you is looking for some of those short opportunities, knowing, not that gold, you can't make money on the long side, but the statistics are with us that yes, we like gold to the short side. Okay, bonds. Another trend is our friend, right? Look at that. Look at that beautiful trade. So this is why it's important to follow rules. Not every trade's going to be like this, don't we wish, right? But bonds has been unbelievable, right? The summer long play was really good, but now the short play, right? We've been looking for shorts since August, okay? And you got a nice short here. And I mean, look at that. So it went back from a green dot down here back to a red. There's an entry, right? And then you just stay in it until you get a red dot. So when was that? Well, that's right. You'd still be in this trade, right? You see that? You never know that going into a trade, but it makes your rules very simple. And that way you're not tossing and turning at night thinking, is it time to get out? Because I'm not worried about getting out at the low. Okay, maybe that's going to be the low for until we get a reversal, right? Maybe. Doubt it, but maybe. But what I want to get is about 80% of the entire move. And using the Laguerre with the Hackenacci with the seasonality, you typically on these nice moves, when you're right like that, you'll grab about 80% of the entire move. The unknown is what the entire move is going to be. Okay. So instead of just getting out right here and the yellow dot, saying, okay, I made enough money on that small trade, right? If you were patient, you were rewarded. Okay. You were rewarded. So bonds, absolutely looking to steal for shorts. Okay, let it retrace. Who knows? Maybe FOMC, maybe bonds will pull up here, and then you can look to re-short. Okay. But again, not every trade is going to look like this, but these are the trades we live for. Okay, the markets can trend really nicely, and Hackenacci allows you to stay in those trends longer. Right? It's about big wins, small losses. Big win, small loss, small loss, small loss, big win. That grows your accounts. Okay, just starting to make a nice win and getting out just because you think you made enough money. Okay, that's not a good recipe. When you can beat the market, beat the market. It's probably one of the biggest differences between my teachings and others, for better or for worse, right? is, I mean, I still look at support and resistance levels because some are, like going back to the VIX here. I mean, obviously you could just look at a chart here and say, well, yeah, 28 is a key level. All right. But when you're in a trade, if we had support, or in this case, resistance coming up, and I was getting flat bottoms continuing the direction of my trade, I'm not exiting the trade, folks. All right. Okay, I don't care about any support and resistance levels. If Hackenacci tells me to stay in it, I'm staying in it. Now I can take off half a position, right? You can say, okay, it's come up to here 8 times, so I'm gonna take half of my position off, but keep the rest of the trade because Hackenacci tells me to. In those cases, you can absolutely do that. But I'm not just getting out at a particular level, because to me that's again, what if it then continued for another month in that direction? How would you feel about that, right? So, Hackenacci has allowed me to stay in the trades longer, right? And when you stay in those trades longer, based on following the rules, big wins versus small losses. Okay. All right. So that was bonds, gold. We got that all taken care of. All right, let me take a look now at, well, just show you Bitcoin. Again, I won't show you seasonal here on the right, but Bitcoin's been really weak. It's been really following the markets pretty nicely, right? And so again, we're at a low back here a few days ago of 18.19, recent low, but Bitcoin, it seems to be following the markets. Now, December is typically a bullish time for Bitcoin, and then January is weak. So we'll wait and see if that plays out again this year, but I'll keep you posted. All right, so when I look at a stock like Apple, okay, you could look at this and say beautiful seasonal move to the upside now, and now we've got a trigger, right? See the red green dot today. So the overall trend was up. We had the retracement, and now we're heading higher, flat bottom, flat bottom. Okay, I'm not taking this today because again, we're going right into an announcement. Okay, what I'm going to wait for personally, again, it all depends on your risk tolerance. Okay, I like these wicks on the weekly as well, but I still want the weekly to turn green. Then I'll look for my entry on Apple. Okay, now if you're looking to buy it and hold it for years, sure, go ahead. Right, it's a pretty good price. But being that I'm more of a swing trader, that I'll hold a position swing trading from a day to 2 or 3 months, depending on how much it trends for us. Right, then that's important to me not to go in right before a news event. Yeah, if I'm right, I'm a hero, but if I'm wrong, I'm putting myself in a position I don't like to be in. So I like to see that weekly turn back to green, even though you can see these wicks here, and it certainly looks like roughly that 153 level is really good support. I'm going to wait for the weekly. Now, if you're not going to wait after the announcement, it's pretty easy. You go in, whether it's a win or a loss, you just get out on the next red dot, right? So if it goes against you 2 bars later, you get a red dot, get a small loss, you move on. Okay, don't hold it. Don't think, well, it may turn around, because it may, but what if it doesn't? Okay, you always have to be thinking about what if it doesn't in order to be trading for a living, okay, or trading to generate income anyway. Tesla's another one. We've got some beautiful seasonal moves coming. And here's the thing that's exciting about Tesla, okay? Seasonal beauty to the upside. But even though the market's been pretty weak, Tesla's back, after the split now, right? More and more people can afford it. Tesla's going to start continuing higher. So my goal on Tesla is when we get that retracement, and it will happen, right? Maybe it's going to hold right here and then reverse. The next long entry, especially heading into October, that's what I'm looking for, okay? And if it continues higher, I'll just try to get in on a 4 hour. So I have a plan, okay? But Tesla's a great one because it's going back in the direction of the seasonal. We already have weekly agreement. You see that? One of the questions I get a lot of times is, when you have a stock that might have red weeklies, do you like to go long if seasonality says that? And typically what I do is I wait for the weekly to align, then I'll take the daily triggers, okay? Yeah, Jason says, so in this case, to go long right now, the Laguerre is not optimal. And you're right. I mean, now this could stay up here for weeks, but more importantly, I mean, my rules are very simple. If I didn't get in here on this Laguerre trigger, okay, let's say I didn't, but let's say what's the next steps? Well, the next entry would have been potentially where you got 2 yellow dots on Heikin-Achi back to green. That's your next entry opportunity. Okay. I don't just go in to go in. My ideal is this type of Laguerre with Heikin-Achi in agreement, right? That's my optimal entry. But there's many cases, like right here, when you went from a red dot back to a green, even though the Laguerre is heading higher, right? That's still perfect, because remember, and again, forget earnings. I'm just teaching a general candlestick, Heikin-Achi candlestick. Once you're in the trade, you have specific rules. If you get 2 red candles in a row and it goes against you, you get out, which will give you a red dot, right? Small loss, because you can always get right back in. Okay. Good point, Jason. Okay. So, I mean, look at Google, right? So Google's another one now. Now that price has, split, a beautiful split for us. I don't know if you saw the option volume now on Google. It's amazing. But, this is a thing of beauty. Why is that? We know we got a good seasonal run coming in us. Okay, not yet. I'm not going against a flat top weekly. Okay, more than likely this is going to continue lower for now. But at some point it's going to turn around. And when it does, and the weekly's in agreement, Google's another one that I'm real excited to get into. Okay. Netflix, been strong, right? So again, it's finally turning around now. If you look at Netflix, right, it had the major move down. It'll probably climb back up to those 380, 400 levels at some point. And now we're back into a defined uptrend. So, to me, after earnings is when I'll start looking at spending more time on seeing on Netflix. Okay. Obviously, it's a volatile stock. So again, it's about risk reward, what you're okay with, but it could definitely give you nice rewards up to that 380 level there. Okay. NVIDIA. Again, what a discount, right? Thing was at 280. Now it's down to 130. We got great seasonality coming in Q4, at least for October into November. So again, once that weekly turns around, I'll be looking for long plays. Okay, I don't have the FOMO, folks, the fear of missing out, meaning I don't care that if I wait for this weekly to come and turn green, price went from 135 and now it's at 160. And then I finally get a trigger at 165. I'm fine with that because, yeah, you could have got in earlier, but what if it just continues down, right? I don't like to look at after the fact trading. I look at real life trading. And, we do know that when NVIDIA gets back going, I mean, do we really think it's not going to hit back up here at some point in this open area? Okay, certainly back up to 190, but then it'll probably bust through that and continue higher. So, if you're one of those traders that really do fear missing out, then I would go in on some of these triggers here, smaller sizes, because there's a reason there's a trend in this case to the downside, and there's no reason to try to pick the bottom, right? People that pick bottoms look like this, right? Typically going in the wrong direction, because again, who makes money off retailer traders? Professionals, institutions, banks. If that's how they make their living, off retail. So think of trading as a business. Think of it as if everyone's telling you it's going higher, it's probably going lower. If all of a sudden you see your buddy on CNBC saying, oh yeah, this is going higher for the rest of our life, it's probably getting very close to a top, and vice versa. It's absolutely amazing, but it's true about the psychology and what most retailers think. It goes in the exact opposite direction. Okay, that's just the way it works. It doesn't mean right away. It doesn't mean the first day, the next day. But when you look at oil, not only was it following its seasonal pattern pretty well this year. Okay, let me bring up oil again just to show you something. Okay, but when it finally hit up here, way up here though, these blow off wicks, but even when it retested here at 122, okay, the news was talking about oil every day, saying it's going to keep going higher because of Russia, because of this, because of that. Okay, that right there was a clue we're probably close to a top. Okay, then so again, this was like in March, and then again in June. So what's fun is then when you go look at here, okay, look at June here. Okay, they were the most net short, so we knew we were close to a bottom. Okay, and I'm sure say close to a top here. Okay, a bottom in retailers, but a top in price. And so when you have the news saying one thing, you can still wait to see what the actual positions are, but it was a perfect match. So we knew this was very close to a top. We just didn't know exactly when. It could have went a few more days, another week or two, but we knew we were super close, right? We knew we were super close. and then, it blew all the heads off the retailer traders down, right? That's how the markets work. And that's why I'm holding these sessions more than anything. Some of this you may already know, but if you don't, it'll hopefully help you stay out of positions just because one of your buddies or your favorite Kramer guy on TV says it's a good time to buy it. Okay. Yeah, I just here I just I don't know what happened there. Hold on. Let me see where that's at. These are I just don't have the regular price on here because of my indicator. I can't, what do they call it here? HA. I think it's this one. There. Now you have the open and close on there as well. Okay. Okay, so again, I mean, we can go over a lot of these different examples, a lot of the tech stocks, like Amazon, right? Same thing. Amazon's got a great long play coming, but we got to be patient. Okay, we got to be patient. That is what's critical in these situations, is not rushing. You're not rushing at all, because you got plenty of time. Domino's is one of my favorites coming up. And it's so exciting to me because look at this. This could even be a double bottom. Isn't this interesting? We had divergence at a low with my divergence indicator. And now we're almost testing that low again. I don't see this very often with divergence, right? So again, am I going all in long right now? No, I'm not. Okay. Now, I know a lot of traders will look at that and say, okay, I'm just going to go long and put my stop right below the recent. And if I'm wrong, it's a small loss. If I'm right, there's a lot of room to the upside. You could absolutely do that, but here's the risk. Earnings coming up and flat tops. So I'm not even going to do that. Okay. There's just too much. I feel like I'm almost just giving money away. Like it's going to come down again before it goes higher. But I love Domino's coming up. And you'll probably see that in one of my trade of the month videos, probably either October or November, possibly on Domino's. Okay, I love trading Domino's coming up this time of year. And once it gets going, boy, can that go. And I can't stand the pizza, but I like the stock. Okay. I grew up in Michigan, so I can say that about Domino's. Okay, I had an email on NEO, so I figured we'd talk about NEO as well. So NEO has a 5-year seasonal pattern coming as well. But massive downtrend on NEO, so I'm not aggressively going long at all on this. Sometimes you just need to look at a chart and decide, hey, what does it look like? And there's a lot of better things to trade. AMD, same thing. Look at the November move on AMD. Okay. So absolutely, I'm excited about some of these opportunities that are coming. Yeah, Thomas, this is my custom seasonal indicator. Yep. So anything that has at least 5 years, futures, forex stocks will show that. Again, I mean, for example, let's say you were a coffee trader. Okay, it shows you the seasonal patterns on anything that has at least 5 years. Yeah. Okay. Go ahead and type in some symbols you want to look at here as well while I'm finishing my analysis here. But CRM is another one. Salesforce, good company. We got the move getting ready to come up, but again, not interested until the weekly, that weekly candle turns around. Okay. So yeah, and I know I promised this, and I'll start doing this more in a couple of weeks. Spend the last few minutes, 15, 20 minutes of the hour talking about day trading. Today I can't, but just to kind of show you, today should be a consolidation day, right? Because before the announcement. So I don't usually like to day trade the day of today's announcement. I don't find it worth it until after the release. Okay, you can see back and forth. Okay. Now, yesterday was a pretty good day, a very nice short play in the market, had divergence, then it ran it back up. We'll start talking much more again, the last 15 to 20 minutes of day trading as well, just because that's what you have all told me. You love the mixture of swing trading at the beginning, overall market analysis, seasonality, but then you want to do more on the day trading side of it as well. So I will absolutely in a couple of weeks start talking more and more about that. So that way, we'll practice together as well. Okay. And then the next FOMC, we can actually trade together if you want to do that. Okay. All right. So I'm back to the daily chart now. Let's take a look at some of your. I love Plug. I love trading Plug. Okay. So again, Plug. Great. Look at that. Look at that great move. That's why people that don't really believe in seasonality, they don't know how to use it, right? Because again, just because it shows that, hey, once we get into let's look right here, right? Once we get into November, see how it moves up. That doesn't mean November 1 just go long. And I think that's where a lot of folks don't understand seasonality. You still need a trigger system. Okay, but what it tells you is likelihoods that, hey, typically something goes higher during a certain time frame. Then when you have your normal conditions and triggers, you can take it, right? Because think about it this way, if you don't have a system, you're just guessing, right? This was last year during that time frame, right? Nice move up. That was very, very expected. But if you don't get the triggers, don't take it. Or if the weekly disagrees with it, wait for the weekly to turn around. So seasonality isn't the only thing that you can use to make an analysis to be successful in trading. But let's say you're only doing long plays. Some of you have retirement accounts that you only want to do long stocks. Why would you want to, for example, Macy's? Okay, Macy's in December usually heads lower. So why would you buy Macy's in December? Okay, it doesn't mean it can't work out. We all know that the markets are unpredictable at times, right? But what would you rather trade Macy's long in December, right? Or what about something like BlackRock? Okay, you see BlackRock in December. That's a better statistical trade if you have triggers on both, right? That's where seasonality can help you regardless. Okay, regardless. Okay. But yeah, BlackRock's another one. I know it's expensive though, but it's another great opportunity coming here in the near future as well. Thomas, the data from my indicator is just from it's a mathematical formula. Yeah. So yes, everything here you see, any indicator at all, is through TOS, absolutely. But the mathematical formulas that create it, like when you look at, let's say you're bringing up a MACD, right? It's using the data from TOS, but it's a mathematical formula. Yeah. So I think we're on the same page here. Okay, so CMG. Let's take a look. So that was in a nice uptrend, but now look at seasonality on CMG, Chipotle. You see how it's downwards to sideways? Plus we had divergence here, so we may be close to a top. But again, more importantly, here's my point. If you're looking at seasonality, don't you think there's something better to trade coming up? It doesn't mean it can't keep going higher. And again, see the weekly? The weekly's green, but typically it doesn't go higher now. So because of that, I would look for something else. Okay? I mean, it's that simple. My mind works very simple. Okay, Noble Corp. So weekly, there's no seasonal data because it hasn't been around for at least 5 years. So again, not something I'm trading, swing trading anyway. But from a pure daily chart perspective, we had a trigger short here on 919. And then if you took the short, I would stay into the trade until I got a green dot. Again, very, very simple rules there. Okay. All right, folks. Well, again, look forward to talking to you all in a couple of weeks. We'll spend the last 20 minutes looking at day trading stuff in 2 weeks, as promised. So that way we'll go for about a whole hour every other week. And again, always looking for feedback. By the way, folks, if you haven't subscribed, let me see if I can find it real quick. To the I started going on. Sorry, I'm talking as I'm trying to find something. I can't do two things at once, right? But Telegram, okay, it's an app you can install on your phone or your computer, and you'll get alerts when I have like webinars coming up, and then it's great because there's no spam involved then, right? But anyway, let me see if I can find the link here. Those of you that don't have it. I'll find it, bear with me. Well, maybe I'll find it. There it is. All right, so let me put it in the chat for you all. If you don't have it, it's a free app. And it'll help you with some of my public events and just some general information on that. So I just put that in the chat for y'all. Okay. And again, you can download it on your computer or your phone and then just subscribe to it. And basically, it'll just show you things coming up, things I'm doing, any general information. And I like it much better than texting at this point and all that. So all right. Let's see here. Yeah, we can take a look at Twitter. So Twitter on a 5-year season, typically kind of continues up, and then October, it goes lower. Okay. Now, again, this is only 5 years of data on Twitter, but interesting enough, we seem to be close to a top here. But on Twitter, more than likely, we're getting close to a top, and we'll revert down the downside there based off of. But again, 5 years of seasonality isn't as significant as 10 years, right? Okay. All right, folks. Well, I'll talk to you all in a couple of weeks. If you have any questions, don't hesitate to reach out, and have a great week. Take care now.